Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
So we put up this list of the 6 and 6, and I regrouped them on another page here in Radar Screen, and I'll push the font a little bit. Maybe it'll be easier to see. I regrouped them, so I kind of paired the ISE index with the spot pair so that we could take a look at a few different things. First of all, what we'll notice right away, and this, I heard Steve talking about this before our formal start in answering some questions and in reviewing some things about current markets. We'll see that there are some cases in which the pricing looks the same. We may have a digit difference or a decimal difference, and I'll tell you why that is. But the pricing essentially looks the same, such as here in the yen or here in Canada. And someplace where the pricing looks completely different, for instance, here in the euro. And in these next few minutes of my discussion, I will focus primarily on yen and euro, mostly to pick one item of each denomination, if you will, one item that matches in price and one that does not. And Steve pointed out the way the pricing is set up, and I think we can make that even easier to work with and show you some tricks about dealing with that. You'll notice the extra decimal place that we have, and we often have an extra decimal place than most Forex dealers. We report out to tenths of pips, and we do that in order to provide a little bit of a tighter spread, and that tenths of pips is not only in the bids and offers in our trading tools, obviously now we're in the analytical area, but the tenths of pips are also in the analysis and in the data, so we do report out to a very fine degree of precision. And that may be, again, if this spot pairs look a little different than what you're used to, it may be that we report an extra decimal than you might be used to looking at. So we see in the yen that we see the same number, and the point we were getting at here is the way the prices are denominated. When we look at the yen, we're looking at how many yen to buy a dollar. We're looking at how many yen to buy a dollar. So we might describe it in any way that I describe it or Steve or someone else describes it. Some way, somewhere, if this is unclear, one of those will catch in your brain and it will kind of straighten out. So I would kind of describe it as, well, I'm trading the dollar and I'm paying yen. So how many yen do I have to pay for a dollar? So we see the same number. That's the same expression as we see in the ISE FX yen symbol. Now we see something different when we look at the euro. In here, you'll notice dollar yen. Here we're looking at euro dollar. So here it's how many dollars do I have to pay to buy a euro. We're switching the denominator. And here we've got the euro trading just under 139. That's the way a spot trader would look at it. But our FX index for the euro comes out to 72.09. Well, mathematically, if you're not familiar with this, really it's the reciprocal. We said here this is yen to buy a dollar, this is dollars to buy a euro. And the difference between these, this is dollars to buy a euro, but as Steve said, this is euros to buy a dollar. And that's consistent in the ISE, but it doesn't always match the interbank market. I guess that's the most concise way to say it. I shouldn't beat around the bush. So in order to match up prices, mathematically it's just a reciprocal. So I put that into this indicator. I just put in a little formula to give us the reciprocal. For those of you who have TradeStation, I used an indicator which is really just a blank template called Custom One Line. And you'll see that I put in a little formula. It's 1 divided by last, and I multiplied by 100, so our decimal would fall in a comfortable spot. So it's the reciprocal. It's 1 divided by whatever's in this column labeled last. And I did that in this example for all three of the pairs that are denominated differently on ISE than they are generally in the interbank market, which is euro, sterling, and Australia. In our discussion, we'll focus on euro, but mathematically it applies to all of these, that principle. So I did it for both the pairs, so you see, and again, if any of you are like me from Missouri, we want to see, well, is the pricing matching up? So we see this 138,723 is matching. It comes out to a 7209, and my 7209, 138,715. When we get out to that many decimal places, we may have, barely a bid and offer difference. So I wouldn't worry about that slight variation, but we get to see how these match up and that they do match up. So this is not only part of a learning process, but this is going to be important if you're trading currency and currency instruments in multiple instrument formats, because some of the instrument formats will be priced as the spot pair, euro, US dollar. Some will be priced more like the ISE FX contract. And that's something that you will get a little bit more comfortable with, but you will need to make those work and apply those. So running the reciprocal, if you want to do it in Excel, I have an example of that we'll get to in a few minutes. But I put it right here into Radar Screen and TradeStation so I could see it right in front of me. You might also, for those of you who have TradeStation or another application where you can do this, you might even do that for bids and offers. Now, I didn't do it here. I just converted the last. But you might even convert the bid and offer. Now, of course, there's no bid and offer on the ISE index because it's just an index. But it could be on, you might take the bid and offer on the actual currency pair and convert it so you see how far it is in ISE FX terms. And again, it's that same process. Instead of 1 divided by last times 100, if you use TradeStation, there probably are a number of TradeStation users out there. Where I wrote last in this spot, make it 1 divided by, use the word inside bid, one word inside bid, or the word inside ask, one word inside ask. Don't just use the word bid or ask. It's getting the correct value out will require the word inside bid or inside ask. If you want to try that, you're welcome to do that. All right, having looked at what the symbols are and getting an idea that some of them are going to price the same way you might be used to in the Forex spot market, some of them are going to price the reciprocal, let's take a look at a couple of the charts. Let's take a look first at this one, which is the yen. And I said that we won't look at all 6 pairs. We'll just walk through a few examples using 2 of the pairs, one where there is that same expression yen and one where the expression is reversed, is the reciprocal, and which will be euro for my examples. But I think it'll get the points across. So in this chart, you'll see 2 data sets. I'll make it a little bigger, but I want to leave this up here just so you have a visual reference. You'll see the 2 data sets in here, and the first data set, known as data 1 to TradeStation users, is that $YUK.X, that's the ISE FX symbol, in a daily bar. And here I put the interbank symbol, the USD/JPY, also as a daily bar. A couple of the things we should make some observations on. First observation is we can see that the price action is pretty much the same. And we'll get a little closer to that pretty much the same in just a minute. But certainly at a first look, we see that the price action generally matches up nicely.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.